In the spring of 2022, Spartan Investment Group offered investors a new approach to self-storage investing. For years, what we had done is offered syndications on a deal-by-deal basis. But what we observed was that many investors were either investing in every single offering or spent a lot of time vetting specific investments. So we introduced Spartan Storage Fund I in 2022 to streamline this process. And the fund provided a platform to capture multiple, well-vetted opportunities with a singular investment. Doing so really allowed our investors to kind of spread out risk, achieve better exposure to high growth markets, and overall the potential for higher returns. However, we learned that there were many additional benefits that came along with the fund. Even against the backdrop of high inflation and a volatile market, Spartan Storage Fund I really allowed investors to realize success. And as the self-storage industry underwent rapid consolidation, the fund allowed us to remain competitive and continue to offer the best opportunities and the highest value to our investors. So what really went on in Spartan Storage Fund I? What did we actually end up buying? Well, we ended up closing on 6 facilities that were value add, and they provided consistent cash flow to our investors throughout the back half of 2022. And the 6 properties were spread across high growth markets: Bonita Springs, Florida; Havelock, North Carolina; Chattanooga, Tennessee; and Louisville, Kentucky, where we actually purchased 3 separate facilities in that market to really capitalize on economies of scale. Now, closing these investments in the tumultuous times that were 2022 really was overcome by the fund. As we closed on each property, our team was able to immediately begin transitioning the facility. We optimized returns. And what we do at each property is we rebrand each property under our Free Up Storage national brand. And we implement automation. We add ancillary revenue streams through our tenant insurance program. We enhance staff training. And we make property improvements to provide a safe and secure facility. And this allowed us to lease up the properties at extremely impressive rates, raise rents, bring overall value to our investors, which provided cash flow. So despite a difficult financing environment of last year, our team secured competitive funding at a fixed rate with an average interest rate across the fund at 5.58% across the entire portfolio. In all 6 facilities, which comprise over 500,000 square feet of prime real estate, are in markets where the appetite for self-storage outpaces supply. So let's go back to the challenges of deal-by-deal syndication. Financing self-storage, especially in a rising interest rate environment experienced of 2022, can be challenging. And a deal-by-deal syndication puts a strain on finding excellent financing terms, rates, leverage, and close on the property in a timely way to begin the ultimate goal, which is cash flow to investors. And it's like landing a helicopter perfectly atop a very steep mountain and blowing snow in tough conditions. You're trying to perfectly secure the correct amount of debt, the correct amount of equity, and hit your investor projections dead on. And the fund's flexibility put our investors in a better position because the facility could be purchased in all cash, driving better negotiations, better flexibility to place more advantageous debts on the property at a future date. All the while, the property is putting our investors' money to work sooner and producing cash flow. And a great example of this is our case study today, which was our first facility that was purchased by the fund in Havelock, North Carolina. The case study that we're going to talk about and how it benefited our Fund I investors is an example of how our 2023 fund's growth and income will both those investors will benefit from the fund structure. Now, in the spring of 2022, in Spartan Storage Fund I, we had identified a property just outside of New Bern, North Carolina, in a town called Havelock. This facility provided day one net positive income to the fund. The facility was priced 40% below market value, and we had rents that had not been raised since the early 1990s. This was your classic mom and pop purchase that Spartan and its investors benefits from. We were set to close on the facility for $15.5 million in late June, and our due diligence was wrapping up, but we had not identified a lender that would produce the best results for our investors. So, having the fund's flexibility, it enabled us to close and purchase on that $15.5 million facility in all cash. And the facility allowed us to secure the property at a steeply discounted price that had below market rents, and our financing team now had the breathing room to go find attractive terms at a later date, and the investors benefited from putting their money to work and cash flowing the facility. So this enabled our investors to start earning their 7 and 8% preferred return accruals, and it benefited the investors in that the monthly cash flow between 4 and 5% started to begin. So when looking ahead to this year and the Income and Growth Fund, we're going to continue to face a challenging interest rate environment. We have opportunities, though, to pick up properties at a steep discount that will benefit our investors. And this is why the fund will be the continued way forward for the foreseeable future. We look at the forward curve, which tells us what the interest rates, what the analysts expect the interest rates to be. And they're only going to get worse in 2023, and maybe even beyond that. But this is going to create massive opportunities for our income and growth fund investors. With many operators unable to find financing, unable to buy all cash, opportunities are going to open up. And this is why we're continuing to offer the investors the benefit of the funds. And we're going to strike on the best opportunities in 2023, and in some cases, really take advantage of this cash purchase option. So having successfully closed Spartan Storage Fund I at the end of 2022, we're now setting our sights on an even more ambitious goal with the launch of 3 funds, the Spartan Income, Growth, and Debt Funds. And next week on Wednesday, February 15th at 4 p.m. Pacific, we're going to dive deep into what the Spartan Storage Income Fund is going to do in 2023. We've already identified properties. We also have the opportunity to really capitalize on the what we think is going to be all cash options this year. So if you wanted to join us, please join our webinar on Wednesday, February 15th. There'll be a recording. It'll be sent out after. And we're going to go into Spartan Storage Income Fund, which again is going to be much like Spartan Storage Fund I last year. The following week on the 22nd, we're going to go into the Growth Fund. And then we're going to have one more webinar before the funds launch on March 1st of 2023. And as a reminder, for those that invest in the funds in the first 45 days, so basically from March 1st to about April 15th or so, you're going to be benefited by getting a full step up in share class. So investors who invest $50,000 will get the benefit of being moved up to being a Class B investor, and those who invest $1 million or more will get moved up to Class C, and so on. So if you invest in the first 45 days, there's a massive benefit of getting a better preferred return from A to B, a higher hurdle split of up to 10%, and a higher back-end split in the fund as well. So it's going to really be advantageous to take a look at our funds. That's why we're doing all this education this month, to really bring you up to speed on exactly what we're doing so you can be better prepared and equipped to make good investment decisions in 2023 and beyond. So thanks for watching, and we hope to see you on Wednesday. Thank you.